Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello, everyone. Welcome to today's Top Stock Pick segment. I am Jeremy Mullen, and I am here with Shiraz Mian, who will be following me with his pick. But first, let's get to ACMR. That is, of course, ACM Research. This is Zacks ranked #1 strong buy that develops, manufactures, and sells single wafer wet cleaning equipment for enhancing the manufacturing process and yield for integrated chips. What does that mean? Well, let's turn that description so even my 7-year-old son can understand it. ACMR makes special machines for factories that make tiny electronic parts called semiconductors. These parts are used in phones, computers, and even cars. ACM's machines help clean these tiny parts, making them work better and last longer. So pretty essential company here to keep the semi-space going. Now, why does this matter so much? Well, the huge demand for artificial intelligence and the chips that have fueled AI have brought big demand for ACM's tools. This has helped the company post a long streak of earnings beats, including a 330% EPS beat last quarter. The stock has pulled back after some recent revenue guidance, so I want to take a look at this closely and give you some couple reasons why you should be bullish on ACMR into this pullback. So let's look at the screen here. I have a profile page up of ACMR Research. We have that Zacks ranked #1 strong buy, and we have style scores that are kind of low. So you want to see some improvement on these. Obviously, this is an issue if we're having some style scores that are pretty low. But this is a very small company, $1.5 billion market cap. Things can change rather quickly here. Forward P just under 17, and we have earnings coming up on May 8th. So what I really want to talk about is the last quarter and this preliminary revenue guide that just came out last week. So let's dive into that. We'll look at the quarter first, and we can see a 330% earnings beat here and a nice string of earnings beats going all the way back to 2021. Now, obviously, you can see the price improvement here. People have started to notice ACM again. Now, looking closer at that quarter, revenues were up 56% year over year, and the company affirmed its fiscal year 24 outlook range. Management cited the strength of ACM's multi-product portfolio and its growing customer base. They added that they have captured market share and made notable strides in penetrating international markets. Now, this recent revenue guide, which was this past Friday, they reported preliminary revenue of 150 to 152 million versus 143 million expected. This is year-over-year growth of 100%. Shipments for 2024 are expected to grow over 160% annually. And the company also reaffirmed its fiscal year 24 revenue outlook in a range of 650 million to 725 million, which would represent year-to-year growth of 17 to 30%. Now, the stock sold off 6%, and it's down a little bit today. I think the year-over-year growth, they might want it a little bit more. And due to that, the stock has run up huge. There's some profit taking in the stock right now ahead of those earnings on May 8th. So maybe a little uncertainty ahead of those earnings on May 8th. Also, this company has a lot of Chinese exposure. So that's a roadblock to this company. And a key to future earnings and future appreciation of the stock is going to be growing revenues outside of China. So let's look at the earnings estimates, kind of get a feel for this upcoming quarter. That's May 8th. That's just in a couple of weeks. Looking at estimates, we can see not a lot of analysts are covering this name, right? But we do have a big jump here after that recent earnings. And what we want to see is a beat of these numbers. It's 36 cents. And it would be nice if they could even hike the current guidance that they gave. And we could see the stock rebound rather quickly. Now, we haven't had many analysts come out since that revenue guide. But we did have Roth MKM out with a note over the weekend saying they reiterated their buy and they have a $40 price target on this stock. Roth sees another strong quarter growth year, led by ongoing China demand, and they also see opportunity for revenue outside China for the next several quarters. So that's going to be very important for investors to see. In addition to Roth, I see some recent upgrades from Goldman Sachs with the $39 target and Benchmark with $38 target. Those came after the recent earnings report. And these targets, that $38 to $40 area, that really aligns with my chart. So let's look at those. Let's look at the charts here. I'm going to close these tabs, and we have a nice chart here Lower left to upper right is always good, so we have a nice trend in place. Now, you guys know I like the Fibonacci level, so we're going to draw one from here. These are the lows down in February to the highs after that great quarter. And the stock is trying to fill this gap. Now, I've noticed the 50% retracement was bought up once, twice, and now here we are again. So I see a couple different things happening. Either we're going to come down, fill this gap, and that's the 61.8%. I want to see this hold and snap back. If we can and get over this blue line, which is the 50-day moving average, and the green line would be even better. That's a 21. That means the bulls would take care of momentum, and I would be, or taking back momentum rather, and I would be targeting up here, okay? Now, if this level were to break, maybe we come down and test that 200-day, and that's the next level we want to see hold. Obviously, if it breaks that, we have a bigger situation on our hands, and perhaps, if earnings were to miss, maybe we see that happen. So let's zoom in, though, see shorter term what might happen. I want to see this 50-day moving average taken out, let's say about 20 or 28. And then the green line over 28.75. I want to see that taken out. Bulls then have momentum. And I have another fib level here from highs to lows. This is going to be your new resistance, 30, just over 30. If we can get through 30 and the bulls can hold, I'm going to target. We have two targets up here, which align with those guys. Who is it? MKM, Goldman Sachs, and Benchmark. They all have targets up here. So that's kind of all aligning. It's all taking place. I think we just have to have earnings on May 8th and press once again, and the bulls can come back into that stock. Okay, that's it for me and ACM Research. Here's Shiraz with the company I'm really interested in. So why don't you take it away, Shiraz?
Thanks, Jeremy. My pick is Badger Meter, BMI. And I have a couple of slides that will explain my outlook for Badger and why I like it. In this first slide, as you could see, I've plotted Badger versus the S&P 500 year to date, so the last few months. And look at this big spike. This is last month's blockbuster quarterly report that confirmed to the market that the positive momentum they had been seeing in Badger in recent quarters was here to stay and was sustainable. Then not only blew through what was expected, but significantly guided higher. And just a quick disclosure, I own Badger in one of the model portfolios that I manage here at Zacks. So on that track record of outperformance, I'll quickly run through it. You could see the very strong sales growth, margin expansion, but most importantly, this very impressive free cash flow conversion. And that's basically the metric of a company's ability to convert its earnings into free cash flow. Free cash flow is the operating cash flow prior to paying out capex and dividends. Again, a visual representation of what we discussed. Badger Meter, for those of you not familiar with it, which probably is most, since it's a smaller company, Milwaukee-based, about $5.5 billion in market cap. It makes water meters, but as unglamorous and boring as that sounds, there's a big technology component to it, and that allows for operating efficiencies for its customers, higher margins, and that essentially is the value prop for Badger as it pitches the product to its customers, mostly water utilities. Badger's product and associated services, and services is a growing part, as you could see on this slide. It talks about SaaS. We typically don't associate SaaS revenues with somebody supplying the utility sector, but that's what it is. There's associated services with these meters that allows Badger customers to have cloud-based analytics capability to monitor the performance of these meters and respond accordingly. You could see this is the consensus estimates for the next few years, and whether the PS or the revenue. So very strong momentum. This isn't a cheap stock. I'm not pitching Badger as a value stock. As you could see here on an EV/EBITDA basis for 12-month EBITDA, but you could see the same kind of premium valuation picture on other metrics as well. But I'm a fan of the stock despite this, because this industrial player isn't cyclical. A cyclical operator. It has secular momentum behind it that allows it to have a good mid to high single-digit revenue and double-digit bottom line on the back of improving operating margins, a lot of recurring revenue, and you could see that in this revision trend. So the red and the light blue at the top are estimates for 24 and 25, and you could see how the revisions trend has turned around. And as long as the revisions trend remains positive, I believe you should be comfortable paying up for a leader like Badger. They have a clean balance sheet. They pay out a dividend, faster growing, are relatively uncorrelated with the market, less than 1 in beta. So a good long-term quality, small to mid-cap stock that will add to the diversification of your portfolio, and is relatively less known than typically the stocks that you hear about. So that's it, folks. We'll see you guys next week.